Hello, this is Mike Swanson. I run the website wallstreetwindow.com, and today I got a very special guest. I'm speaking with Jordan Roy Byrne, who runs the website thedailygold.com. How you doing today, Jordan?
Hey Mike, I am well. Thank you so much for having me.
Oh, I'm glad you're able to make it today because this is a very timely interview, not just because of what's going on in the financial markets and with gold, but because of what you've been saying for the past several months. You have been warning people that gold would not go up for real until we got to the point where the Federal Reserve is going to lower interest rates. Well, now, this week, as we're speaking, the Fed fund futures are projecting over 90% chance of a rate cut in September, a possibility of one in July. And on Tuesday, Jerome Powell gave a speech widely trumpeted everywhere in the financial media that he's prepared to lower interest rates to zero, even begin a new quantitative easing style money operation if he deems necessary. So it seems we're getting close to that moment in which a rate cut and Fed action will materialize. So is it time to get excited about gold yet, or is it time to wait a little bit before that news becomes reality?
Well, Mike, it's a good question because looking at the historical data, in most cases, it's usually 1 to 2 months before the cut where gold stocks really start to move. And so the way that they've moved in the last week or so, I mean, that's telling me that we could potentially even see a surprise cut this month or a cut in July. You know, normally they don't really do anything in July, but the odds of a cut in July I saw yesterday were 70%. So I think there's a strong chance they're going to cut rates before September. And look, it's setting up precious metals to have a strong move into the end of the year. I mean, simply put, Mike, I think precious metals are in a good position here. We should see gold break out. I think it's going to be able to trade above 1400. I mean, this is the fundamental underpinning that's been missing for the last couple of years. But what it all comes down to in the very big picture, Mike, is gold going to outperform the stock market? Are we going to see precious metals outperform the stock market? Because the downside to this scenario, and I want to just take a step back, you know, rate cuts in the majority of cases, the majority of history, the start of new rate cuts, it's always good for precious metals, but it doesn't guarantee you're going to get a bull market in precious metals. So what really matters for precious metals is they have to outperform the stock market over, you know, the coming months and quarters ahead. I mean, in the scenario where the stock market rolls over, we get into a recession in 2020, they're cutting rates down to zero again. I think that's the scenario where you absolutely get a bull market in precious metals. Gold is going to go back to 1900 again in the next couple of years. However, the other scenario would be, you know, they cut rates a couple times, and for whatever reason, the economy is just not that it's not that weak. It's not weak enough where they really need to do that much more, and maybe things stabilize a little bit. You know, Trump backs off on all the tariffs, so things will stabilize. And then, you know, the stock market doesn't necessarily have to keep going up, up, and up, but it just stabilizes around the highs. The economy doesn't go into recession. That's a scenario where I could see gold. Gold doesn't make it all the way up to 1700, which is the measured target from this breakout from the long-term consolidation. That in that scenario, you could see gold maybe stopping at 1450 or 1475, and it doesn't really complete that measured move, and then it kind of comes back down. So, you know, we can't predict the future, Mike, but I just think those are the two likely scenarios at this point. They're both very bullish for gold over the next 3 to 6 months, but I don't think a bull market is, you know, guaranteed yet. We need to see what happens with the U.S. stock market and the overall economy before we can make a strong call on that. But in any case, I do see gold going above 1400.
Well, I mean, when I look at a 20-year chart of gold, that 1400 level is fascinating because it's been the high basically for gold now for years, over 5 years. And it reminds me so much of the 300 level when I first got interested in gold back in 2002. 300 was the resistance for 3 years, and gold couldn't get above it. And when I got into gold, it was like at 290, and it went through that 300, and it went up for 9 years from then. But that 300 was such a critical moment when it broke it, and that's why the 1400 reminds me so much of 300 back then.
Yeah, that's an excellent comparison. And if you look at things like the Bollinger Bands and all of those volatility indicators, they are at multi-year lows. And as you know, Mike, when Bollinger Bands and volatility indicators get really stretched to the downside, that usually precedes a significant move. And, we said the same thing a year ago, 2 years ago, because gold's been trading in a tight range. But now, 1 or 2 years later, the volatility is even more compressed. The Bollinger Bands are even tighter. And, again, the measured upside move, if gold can break out and sustain it, would be up to 1,700. So, and I mean, you know that when gold broke above 300, I mean, that was just so significant for not only gold, but also for silver, all the mining stocks and the juniors. And, over the last couple of years, Mike, I mean, the long-term valuations of gold stocks, you look at these gold stock indexes that go back 100 years, like the S&P TSX Gold Index, the Barron's Gold Mining Index. I mean, these indices relative to history in the last couple of years, I mean, they're trading at some of the cheapest levels we've ever seen. Like, we're talking about 95. I mean, at the end of 2015, my research showed gold stocks were the cheapest they had ever been. You have to go back like 100 years or 90 years to make a comparison. They were like at 90-year lows it was 90 years as far as how cheap they were. Now, they're not quite that cheap, but they're like in the 95th or 96th percentile level as far as historically how cheap they are. They're still extremely cheap. I just can't put it into words like historically how cheap they are. And look, if we get this breakout and gold runs up to the measured upside target of 1,700, I mean, you are going to see I'm not juniors, but large gold stocks are going to double and triple out of that move. I mean, just looking at like the price to net asset value valuations in gold stocks. I have some charts that go back to the mid 80s, and this happened in 2015. Like in early 2016, the valuations were so cheap, but we had that big move in gold. Like suddenly the valuations like almost doubled, like just in a series of a couple months. And we could see the same thing again, where gold breaks out, and suddenly valuations, everything just gets re-rated by another 50 or 75% automatically. And then on top of that, you have the move in gold to 1,500 or 1,700, and you get the expanding margins. So it's setting up to be a very, very bullish situation for precious metals. But again, I don't want to say that suddenly we're going to go to 2,000 or 3,000 the next couple of years. I don't think that's a given yet, but I do think it's almost a given that we're probably going to run up past 1,400 here and have a successful breakout.
Well, one thing I believe that can be a catalyst for gold is I've got a Robinhood account, and it ranks on there. I'm looking at it right now, the 100 most widely owned stocks by Robinhood account owners, ranked by the number of people that own them. Out of these 100 positions, there's only one single mining stock, and that's AUI. So that tells me that the people in Robinhood, which I think is reflective of American small investors, have no holdings in gold. I mean, they don't even own GLD, IAU, or any of the other gold funds. They don't even have GDX, GDXJ. They don't even have triple ETFs. All they got is this one position, and they own stuff above that position, which is silly. Fitbit, GoPro, Tesla, disaster stock, all kinds of weird stocks. So if the masses are totally asleep and have nothing in it, then I think that could be a catalyst just in itself. But what will it take to get these people to do anything?
Higher prices, rising prices.
Well, maybe that's why that 1400 level is so critical.
Yeah, and and you talking there, something popped in my head, and I'll plug my new book, which I just sent the manuscript to subscribers last night, talking about precious metals and what I see coming, not just over the next couple of years, but over the next 10 to 20 years. I think precious metals have an extremely bright future. But to what you were saying, I do have a chart in my book where it shows like the percentage of the percentage of I guess I'm drawing a blank on it, but it has to do with GLD and like what percentage. It might be from Merrill Lynch and showing like what percentage of client money is in GLD, relative to everything else. And I think as of like a year ago, it was down to like 1 or 1.5%. In 2011, 2012, that was like at 9%. So as far as like how invested people are in precious metals, like over the last 7 years, like those indicators, you would look like it's down like 75 or 80%. Like people right now, like their investments in precious metals are akin to like what they had in the early 2000s before gold broke above 300, you could say. So yes, Mike, people are very underinvested in precious metals, and if we get a bull market, like a real bull market in gold that lasts a couple of years, gold is going to go to 2,000. Like there's no doubt about it. That's just the only question is, are we going to, I did write an article about this. Are we seeing a rally or are we seeing a real bull market? Because I'm trying to be as level-headed. I don't want to be a perma-bull gold bug. I'm trying to be as level-headed as possible. It's not, look, I do think gold is going to go up another $100 here. It's going to break out. It's going to happen. But whether this is a rally or bull market, that's still a question to be answered. However, if we do get a bull market that lasts 2 or 3 years, gold is going to go to 2,000, no problem.
Well, I guess we'll close up on that note, and I just recommend people listening to this to go to your website, thedailygold.com. And if they do that, and if they put in their email address, they can get the first chapter of your book totally for free. And I recommend people do that. If they do it, what else would they get, by being a member of your email list?
They get my comments on precious metals markets, usually weekly, usually Sunday or Monday. I send those comments out. And if they are on my email list, Mike, they will get a free copy, a PDF copy or an ebook copy of the entire book. You will get that at some point, probably in the next 2, 3, or 4 weeks when it's done and I send it out publicly.
Oh, great. Well, I'm looking forward to reading the whole thing myself. So thanks for taking the time out to talk with me and all the other people I got out there listening in YouTube world. And if you're new to me and Jordan, and you just randomly come in here and you're one of these Robin Hood people who owns no gold, by God, you got to go and get this book. So thanks, Jordan, for talking to me, and we'll do this again sometime soon, hopefully.
Thanks so much for the plug, Mike. My pleasure.